Hi, welcome to the Market Alert for Thursday, the 18th of January 2024. So good news is bad news as Goldilocks reality checks wrecks the dovish dreams of traders. Bitcoin, bullion, big tech bruised, and a big bond bear flattener back into inversion. So we've gone back into seeing the bond yields inverted once more as the Fed are pulling back on these rate expectations, rate cut expectations unwind after hot UK CPI. It only went up 0.2%, and US retail sales obviously hotter than forecast as well. Speaking of inflation, surprise at 4%, 3.8 was forecast, came out at 4.0, didn't it? Let me just double check that actually. Because I was probably thinking about the forecasted number. Yeah, the forecast. So it's only, well, it's gone up. The previous was 3.9 and it's gone up to 4. 0.1%. No wonder the markets were sideways yesterday. Let's just have a look because they hide the RPI numbers. Maybe that's what the issue is. And let's just see if we can find, here's the RPI. Let's just have a look at the RPI number. There it is there. 5.3 before, now 5.2. So, there must be some other core CPI then, is it? GBP 5.1, 5.1. So I don't know why they're putting headlines out like that because it's only 0.1%. There's got to be some other core factors in there to actually create these sorts of headlines that we saw yesterday. Right. Let's move on, have a look at the market's reaction to this, and I can tell you, spoiler alert, it was tedious and boring, is what it was. And again, it didn't reflect what was in the news, because, given that it was supposed to be hot and all the rest of it, the markets had a different opinion. So let's kick off and have a look at the Dow, the DAX, the S&P FTSE, and see what their reaction was to it. So in the Dow, we were down, but a narrow range overnight, narrow range as well. It's gone very, very quiet. Yesterday, 30-minute chart, a bit more movement on the Dow. It was up and it was down, and then it was back up before the close. Overnight sideways, trying to stay above the DP. We got the high just up here. But that was the market's reaction to it yesterday. It was up 200 points, back down 200, and then sideways there. Let's have a look at the DAX. German DAX down to the 50 EMA, market finding support there, and you can see overnight they're trying to bring it back already as well. But when you look at the 30-minute chart, it was just dire yesterday. The market stuck in a range. What was the whole range for yesterday, low to high? Let's just have a quick look. That looks like the high, that looks like the low. We had 95 points, which is it's fine in a sideways movement if you're trading top to bottom, but the market was just sideways. It just wouldn't break out. It's breaking out a bit now to the upside, which we can see there, trying to get above the DP out of that overnight sideways range where it's been pressured by the 50 EMA. Just trying to get through that. But yesterday, just utterly dire as the markets traded in a range on that news. And like I say, 0.1%, it was barely going to move, was it? But I think the key here is that it's put a spanner in the works in cutting rates, but only for this week. Tomorrow something else can come out and that'll be it. We'll be back to the dovish stance. In the S&P 500, also down yesterday, trading to 62% retracements and up on the overnight in the 30-minute chart. A bit more weakness to the downside on the S&P than the Dow, but recovering quite well there as well, and also trying to get back above the DP and the 50 EMA there, where it's just currently trading at. FTSE 100 came under pressure, as you'd expect, with the inflation numbers yesterday. Market trading down to 89%, managing to close back just slightly above this, trading above it on the overnight as well. And there you can see yesterday as well, down about 70 points, and then just trading in a range overnight, trying to get back above the close. DP above with the BRN and the 50 EMA there. So just have another look at the daily chart. So yeah, coming off the lows before the close could actually give the market a bit of a boost to the upside there. In the US dollar, down slightly. Yesterday rallied up, pulled back, so that means the metals are being supported slightly. So let's have a look at those. Starting off with silver, down to 22.49, which is what I said it would go down to. It's going to break this, not necessarily today, but it's going to continue to be pressure to the downside. It seems to be a support area at the moment, but still $20 for me is where it's going to get some sort of shakeout with some sort of black swan event. The downside is not over. They haven't finished crushing this market just yet. 30-minute chart, you can see the crush. London opens, market set the price, and down she goes. Up on the overnight, but don't hold your breath. It won't be going much further than that, I suspect, as they've got the market now pinned below the 50 EMA and the 200 MA in the 30-minute chart, and we're below the 200 MA now in the daily chart as well. Meanwhile, in gold, still above the 200 MA, so more bullish than silver, no surprise there. Market trying to get back, but struggling a bit there on the overnight as well. There's your crushing of the gold market yesterday. Whatever rally they get, they're going to push it back down because the central banks are still buying more gold than they've ever done since 2010. Right, let's have a look at the gold-silver ratio. And yes, just as we'd expect, it was up yesterday, down slightly overnight as the dollar's down and the metals are up. But again, we'll soon get to 92 and through that level before long. Right, let's have a quick look at the markets for yesterday. On the intraday, wasn't very good because the market just did not react to that 0.1% increase. It traded sideways. In fact, I saw more movement over Christmas and during Christmas trading than we saw yesterday in the German DAX. So let's have a quick look at this and then also what the market's doing overnight. So they released the CPI numbers. That this is the market's reaction. Absolutely nothing. Market moved down a bit and then came back, traded sideways. We were already sideways before we even opened, and when we opened it set the tone. When you see this where the market's already sideways after the first 4 or 5 bars, then you know it's going to be a bad one. Market moves down, then it moves straight back up off the support to the left. Got the resistance to the upside. It's already starting to create a sideways move there. You can see it's already got the makings of it to actually trade into, and you'll see in a minute as the market comes back, it takes out the long, then it takes out the shorts, and then we manage to move up slightly before we come back with another short, and then we go back up and with another one where it managed to actually trade to the scalp. All of the previous trades didn't. Tiny bars with the interspersed between a bit of volatility. Back down again to the short side, managing to this time hold and grab a few points to make up the losses from the morning. Down to the support, once you get to the support, and then we have a few more points there, 38, and we've got 41, and then the market starts to make its way back in just a second, and when it does, take the money off the table. So that helped to recover some of the losses there. Another potential short that gets switched to the long side, and then this just trades up to the scalp. It takes a moment or two, and then that's over as well. And so another few points made back, but otherwise the rest of the day the market just traded sideways. And in the afternoon, this is the afternoon session, the market doing absolutely nothing, just stuck in a small range there until the end at the 4 p.m. cutoff. So let's have a look at the overnight situation, see where we are, see if there's a bit more volatility in this market. So overnight, as we've seen already, the market trading down to the 50 EMA. We're trying to move back up to the upside. It could be just a nice trade to the upside today, and we've already started by the looks of things, as the market wants to head back towards yesterday's high. At the moment, so all of the averages are in the right alignment, 200 below the 50, 50 below 20, and 20 below the 5 there, so and above the DP. So bullish at the moment, might have a shakeout to start with, but at this time of recording you can see the market driving through the close. Attempted this earlier, then resting on the 200 MA, finding support at the 200 MA and the 20 MA there as well, and now just making some nice progress to the upside. And like I say, all of the averages are in the right alignments there. Let's have a look, see where the first problem could be. It would be this BRN. That's where there'll be some resistance, and that comes in at 16,450. So let's see what occurs when we get to the open. Hopefully there'll be a bit more life in the market than yesterday, because it was just mind-numbing. Very, very strange. Really, really strange, because that doesn't normally happen when you get that sort of news. You do get an abreaction in the market and an increase in volatility. Never seen it before on a CPI number where the market has been so choppy after the news. Maybe they're just trying to factor in the fact that the Bank of England have now got its hands tied and they can't cut rates this year. Maybe that's the case. Certainly reflected in the FTSE, but we'll just have to wait and see. So fingers crossed we get a return of volatility today. Like I say, a bit of a move to the upside, might get a shakeout to begin with, and if we do, watch the DP and the close, where the market's likely to find the initial support. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.